nothing going on in the oil market, and there really is not likely to be any support of size even into the OPEC weekend. So why I'm just short any pop, and I feel very, very convinced that this is still working. I just don't see any reason to change it. Let me just kind of show you something that Bob posted as well on this thesis. There's just no open interest. They're just not entering the market. They just don't care. So let me just kind of bring this up. This, right? So why do I still keep hammering that this rotation out of oil and gas is more than just profit taking and sector rotation into mega cap and AI? It's just lack of interest, literally. So I think Bob really summed it up well. He said, liquidity, what oil shorts? The reality, there isn't any. Instead, just a withdrawal of the speculative community from oil trading. When there's no interest, it just falls itself. And by the way, dry powder has been, well, you know, a bad trade. You don't need to front run this. So his point, and I really agree with that. Any pop has been a fabulous place to short. So kind of getting back into that, we know about nat gas still on the ground, sadly. All right, so here is this big picture. You can see we're obviously from this March 130 high. We did a lot of digestion, but then we finally broke this trend line. I love trend lines. Okay, so we broke, but I was still like, okay, we still need to come on down. We still need to come on down and break this kind of major area of where we broke out and kept getting supported. And then when we finally did break, it was in that kind of 95, 93 area. That was it, that then acted as resistance. Okay, we have had some occasional pops. This is the whole central bank support, et cetera, but there's an intervention collar on this puppy. Crude is not allowed to go too high. There's also that SPR release, which you would think, of course, gives us a supply deficit, and it does. But as it relates to demand, and of course, just ring fencing happening in the world of they'll trade their own regionally, right? And in outside of US dollar transactions. So this is just losing a lot of speculative interest. So even here, where we dropped into that price target that I had of literally 65, right? It overshot it by a little bit and popped up, got supported, moved higher, and then this was the OPEC supply cut. Remember that? So technically speaking, it was a gorgeous place to short once again. 83 maximum, I said, of 85. We rolled right over at 83 textbook. I mean, every single level has been so technical, and then it dumped. That was very, very tough to catch. By the way, that was in futures market, but nonetheless, it tagged very briefly, came back up in this kind of Morningstar reversal. And I said, the only way this is bullish is if it holds 70, end of point. So it did hold 70. It started going higher. Here's your trend line. And then it came right back in. Boom. That's done. Evening star reversal means that's a reversal candle. We had a little bounce back into resistance, and then it just completely fell apart, broke through 70. That's it, follows through. So I still think this is going to get just no support, even with an OPEC cut this weekend. So I am still looking for a rotation into oversold oil and gas and, you know, reflation trades. Yesterday, we had a very short blip, but I don't think we're ready yet. I think end of quarter, more like it. So in other words, this rotation into concentration risk for the first half of 2023 will likely turn into a massive sector rotation out of the overbought stuff and into the oversold stuff. But that also means we need to get through the month of June and all the OPEC fun and games. It means we need to get through, obviously, the liquidity, the TGA issues and debt ceiling drama. So after the 5th, when we go into options expiration, which is basically middle of June, which times exactly with a whole bunch of central bank decision making, right? Around that June 15th, and then June 16th is Bank of Japan. And then we have options expiration on the 17th. And then that's when I think we have a lot more volatility coming in. But right now, we could have a lot of pressure still in this complex despite OPEC this weekend. The big change overnight was a little bit of a softening in the dollar yen. And that is helping, the dollar kind of pick up. Obviously, a few commodities are starting to base like steel and copper because they're so oversold. But you can see this is the dollar yen coming in. It's not conclusive yet, but it's definitely softening exactly at that 140.80. And I'll show you on a different chart. But the point is, wow, this is bonds, since I'm almost there, and dollar. All right, so here's the dollar move. We have very, very nicely gotten supported, right? This 101 pushed higher, technically, really, really nice job. Here's the daily trend line, and it's been digesting, as you can see, 1, 2, 3, 4, 5. Today's the 6th day. We could pull back a little bit. We obviously still are not out of the woods as it relates to tagging some higher levels, but it's also weekly resistance. So getting a pause here is a little helpful, right? For the market anyway, it should be. But that's very, very obviously very bearish if we can get back above. I've got some intermarket I'll show you in just a minute. But for right now, yields pulling back to what was my level, 3.62. I think we're at 3.63 or something last time I checked. We're very close to that 3.62, and ZB or TLT, whatever, coming right back into this underside of resistance, which happens to be basically 129. So that's where I expect this to hit its head. And then if this is the pattern that I think it is, bonds are going to be a short again. Okay, so letting this kind of run its course, bond bulls defended right here. Literally, we got below and get right back inside. You can't see it now because it's pre-market, but the 10-year pulled back right at that 3.8. And I said, it wouldn't surprise me if this is going to be bullish, and it's yet to be determined, right? Because we got a big, big, big chop fest here within this quarterly channel. But if it's going to be bullish, it's going to come back and it's going to stay below that kind of 3.6 area. And it's going to turn and then move higher. That's really going to be the next positioning. When and if this comes back down, which we're going to be there today, bases and then starts to turn up the next time it gets above 3.678, I think it's going to keep going. So I think that's going to be very bond bearish. We're getting to that point pretty closely, right about this 129 in ZB T-bond futures, and TLT a little bit trickier because we're right above that 102.52. This is basically forming a solid bounce off of that 100. It literally perfectly tagged 100, not even joking. The low was exactly 100. Oops, sorry, 100.00. So let's see what happens at this area of resistance, which is 103.47, which is the ZB 129. Okay, so that's bonds, and this is dollar. And you can see how we're getting a softening already. But this is definitely the oil threat right in this area. You can see where I'm kind of pointing to. Next time we get and tag that kind of 62 area, because we've already done 65, 65. We've already done 63.5. The next target I have is 62, 61.88. Anyway, the point is we're going to start to scoot into this lower kind of triangle. And that is basically 2019 levels. So that's where I'm expecting this weakness to follow through on oil, and dollar getting a little soft right now. But the SaaS companies reported there's fundamental and then there's flows. So let me just kind of clarify this. Just because, we had a great time trading long AI, crowd, whoever, right? These were absolutely moving higher, whether they be hack. But that doesn't matter. There's no edge when it comes to earnings. And I've said that repeatedly, right? So this is a fundamental analyst, and I follow him for years. He's awesome. Anyway, he goes into the fundamental details of why these SaaS earnings were just awful. Massive slowdown in revenues, poor guide. Despite increased and elevated sales and marketing spend, this implies dramatically increased churn or near zero sales force efficiency, yet multiples have exploded upwards, right? That's because it's momentum. Momentum is a flow. We can trade flow. We see it in options. We see it in the dark pools. We see it in price action, right? I see it in all kinds of my indicators. It's a phenomenal, squeeze candidate to just chase the flows. Has nothing to do with fundamentals. But basically, this is what is the irony that I keep looking at. I looking at the big tech earnings, looking at whatever, even the SaaS coming up off the ground. Macy's, Dollar General today saying they really underestimated the weakness of the consumer. They fell off a cliff in March. So they had both given poor, the guidance for the year is what's, contributing to their pressure on the stock. But the point is, consumer is under some pressure. SaaS companies come out, they disappoint despite coming up off the bottom. My point is, it's definitely not a great environment for just being blindly following this the fundamental case that earnings are going to continue up and to the right. Earnings growth, I took that away too quickly, is basically literally showing a straight line, 20% through up, not down, up. Through 2025, way divergent from what I think is going on. And then, of course, this is why I study breadth, right? I mentioned it many times. This year-to-date performance, we got micro caps, very negative, small caps, negative, Dow negatives, but the technology sector, NASDAQ 100 is up 31%. You can absolutely see the divergence. That to me is a show that we don't have a wide rally, a wide base of the rally. It's not a sustainable rally. That's all. So this concentration risk, further to make the message really strong is it's just 7 stocks, right? With 3 stocks accounting for nearly 70%. That is something that is a flow matter. It's not a fundamental case, although yes, these are the perceived value in Apple, Microsoft, and exponential growth, NVIDIA stocks, where concentration is absolutely flowing to explode the multiples, but it's not sustainable, is all I'm saying. So that's it. Concentration risk, be very careful. The oil shorts, there really aren't any. I really like that, that he put together. And definitely another reason that Matthew Pines kind of sends out in regards to Japanese investors own a big chunk of Eurozone debt markets. I think that's another really good reason to stay short Europe, France, and Germany in particular. Now, the problem is that Japanese owned European debt can result in the selling of US treasuries if things go very badly over in Europe, right? Or even weaken further. So it's actually, and I didn't, put that here, but I'm letting you know, that's actually very negative US treasuries. Bitcoin is still kind of languishing, right? It's a liquidity tell. I check it every single morning and we still have nothing, very much nothing. This is that growth, value to growth rotation rally. January effect petered out in February to mid-March. Bank crisis resulting in bank bailout, which then also kind of churned a little bit after that big swing higher. We kind of chopped sideways. We got the debt ceiling stuff coming up, and then all of a sudden, boom, AI, right? All things AI. From April into the NVIDIA report, I am looking for this to roll over for a very nice kind of confirmation tool that now growth takes a serious backseat and value should start to base and move higher. And I've got some plays that I'm looking at in particular. We still have elevated high yield. OAS has not come back down. Oil definitely as a kind of a tell on they're going to say a demand weakness. I'm just going to say no interest. There's just not enough open interest. That translates basically to small caps to SPX being at 2008 levels. Like this is a straight line. Look at this. We literally have got to base here for this to confirm and move higher, but we are literally oversold in this ratio equivalent to 2008. Massive. And you can see its representation in semi to SPY. Again, this is on a monthly, and I'm just kind of pointing that out because I'm still waiting for this rollover. We have not had it. This is the prior high of 2000, but still, and it can still form this shoulder. We don't have it yet. All we've got is a melt up, obviously, in NVIDIA and friends, and no rollover. Same thing with this tech. So that's why I'm saying it's more likely we peter out in June. This is basically that concentration risk is still percolating higher. So it's not completely what I would say wiped or exhausted. but it's getting really, really close. Again, we're getting really, really close. I would say June is it for this concentration risk and petering out, okay? And on that, this matters, which is non-farm payrolls, which we don't have yet, and jobless claims. This will get updated today, but it's moving higher. It's back above into this kind of, 235 area. We needed above 267, long story short. And the reflation trades that I've talked about continue to peter out. Remember this is XME, and I have this elsewhere, but you know this one. It was a shoulder, terrible color, but you get the idea. Head and shoulder. So that's the one that I posted a while ago. And this absolutely executed. It has continued to move lower. This is basically the whole area down to potentially, not all in one shot, but you can kind of see where that was the gap fill we needed to fill. We did. We could bounce right into the underside, but there is a whole bunch in this head and shoulder move relative to SPY that is still in distribution. So just kind of keep that in mind. But the dollar is important. And I still see this kind of 106 area, even though we're digesting at 104, it got cut off a little bit. This is the dollar on a daily. I still see this digesting and then moving up to that 106. Here's another kind of vantage point. This is also on the daily. This is also a different view of the dollar. And so far, this has moved very nicely. I don't know if you can see this, but kind of crossed over, and it's clearly in bullish mode, even here above the zero. Not very, very, very compelling, I don't believe, but a higher above 106, but I think it will hit. Yeah, I think it'll hit this 106 area. Maybe it's 105. Let's see, what do I have? 105.59 if you want to be exact. Okay, so this resistance that I'm showing you is what I see coming into play for a very, very important move. In other words, I think we're going to have a situation where if we get above there, oh my goodness. Otherwise, we get there, we hit our head and we come back down. Right now, we are neutrally poised. We do not have a crossover yet. We are just basing and starting to move higher. We've had this great, great, great helpful trade, right? When this is literally above, right? This oscillator, it's been bullish. We're still in a bullish impulse is all I'm trying to say. Even though we hit trend line, we're going to digest. I still think we're going to come up here and hit that kind of 105.5. And then we'll really get to see what the dollar is going to do. Debt ceiling drama is coming to a theater near you. This will probably take another week or two to really flesh out. Energy, again, this has been something I keep showing over and over again, but this XLE still fading. There's no bullish momentum. It is still bearish. Maybe we'll get a little bounce, but otherwise, I still think we have some lower levels. NYSE is definitely on some very key levels of support. Unfortunately, it's also fashioning this head and shoulder. We have breadth underneath. The bullish percent is still fading. Same thing, right? You can see it over here as well, which is just, again, fade city. There's nothing here. There's just not a lot of strength. We still have a lot of distribution. This happens to be NASDAQ 100, a little bit different. Price is orange, but the breadth underneath is obviously failing on the 100. So I think June is going to be a time where we start to transition out of the NASDAQ 100 and start to go into value, but I'm not quite sure the timing of it yet. Banks are also really poised for either way, right? They look extremely weak. There's no energy. We know that. And then last but not least, my McClellan summation, same. We have this indicator that shows incredible breadth destruction. Nothing else to say about that. And then we have this crazy price action. This is SPX, where we went big swaths of volatility. But big picture, just sideways. We are literally where we were February 2nd in SPY. So listen to this. February 2nd, when we tapped out, 75% of the underlying was above their 200-day. We're at the same price point today, and only 38% are above their 200-day. There's a lot of breadth destruction underneath. Anyway, same thing with small caps and same thing with NASDAQ, but you can't see it so easily. We have 3.6 perfectly. So this is where we should start to see the digestion at 103 and for TLT and 129 for ZB. All right, Macy's is this head and shoulders, right? And they basically guided lower and said consumers in really bad shape. So this has been a continuation sell, sell, sell. Can't help but wonder if these are going to get picked up maybe in July. But the point is Target and Macy's and the rest are really on the ground. An important note about Target, okay, you can see the devastation, right? Dead money for about a year. It could not get and stay above this trend line, right? It had earnings and then it only rallied into the underside of earnings. And then we're talking 1, 2, 3. Yesterday, the largest trade ever in the history of Target came in of size. So we don't know, right? It looked like they were buying it, but someone is basically expecting these plays to calm down. I don't see any turn yet. I had expected 129 to be support. So I guess my point is, as long as this can bounce here at 129, and I think Archna did some selling of spreads, but the point is that is the only thing I can find on these, okay? I think it'll be a much higher probability once we get through this, massive, FANG concentration. Dollar General is in trouble. At one point, that had been a really nice, look at this, had gotten a stick save. Every time it got sold off dramatically, it got bid back up in the next month. So I don't know if this is going to get defended because it is a complete wallop and a guide down and a nasty, nasty expansion candle. You got Macy's getting defended at 11. That's up $2.50. All right, so dollar yen, there's that 140.80 I was talking about. Pullback is still basically in play. It's having a really, really, really tough time. See this 140? It says 76, but it's the same idea, right? It's really strong resistance, extremely. So let's see what happens. I'm not going to write this thing off. Above, of course, is very risk averse, but right now it's getting tapped down. Little bounce in the dollar. It's going to be basically tested right now, right here. I'm just using UUP because, again, it's helpful. Got the 200-day shuffle. 1, 2, 3, 4, 5 days of just sideways at the 200-day. So not what you'd say really convincing. We had a very big push up, but look at this Keltner channel tap. It can absolutely digest here, not a problem. Remember this XME? I showed it to you in that chart earlier, but I've also been on this for a while, right? Huge bearish expansion bar, monthly support, bounce, gorgeous H pattern, continuation down to 44.31. If XME could stay above 44.31, it could get a little bit more of a push. It's not a perfect setup, but it's definitely support. And you combine that with a dollar that's at resistance, you might have a little bounce in these reflation trades. XME above that kind of 44 area, if it holds. SLX above this 55, if it holds. Copper, COPX, I'm just using levels to see if we're going to get any support, right? Above this kind of 34. So all of these are on a kind of support. I don't see any reversal yet. I'm just kind of spying them in case we do. Again, copper above 34, SLX above 55, and XME above 44. All three of those, I want to see if we get any kind of buying in there. XHB, that was a really nice kind of tag you're it. So, and I have this in swing. This is a long until 73, and then I expect to get rejected and come back in. It is happening. And we just tapped that 103.47. So we had a very strong bullish, literally bullish engulfing, a follow through above 101.40, 102.52. I thought would act as some resistance. Nope. Clear right up to the 103.5, which is basically almost at 129. So I think once we hit that 129, we'll have to see if we can get some drama. All right, so these are the ag companies I'm getting asked about. Very, very nice example of you get a bearish engulfing, man, just go with it. All right, so did a perfect with all these reflation trades. I consider this all kind of related. Also the agricultural, the FERTs and nat gas. Anyway, the point is this is broken I think we're going to have a rotation back into this stuff once we're out of this quarter. I like that level 29. If you're selling puts against MOS, 29, that's where I think it gets supported. These are all monthlies, which just kind of help me, right? So we talked about this, I think a while back. It was like IPI. And I said, this thing is in an absolute downtrend. I know it's cheaper than book value or something. It doesn't matter. It's just, there's nothing here but, you know, a protracted downtrend. We're going to get to a point where they get bought back up, but obviously I'm looking for that level now, and I still don't know. But I definitely like the MOS staying above, for lack of a better word, 29. If you're swing short still, I like this 28.5, 29 level should hold for a nice bounce, more than just a day. Like this is support, but just for a day or maybe a few days. ARLP was another one, still a massive kind of wide pullback all the way back down to 1685. And then CEIX, even though they have lots of assets tied to the physical, which I really like, it's just not the time for commodities. This one's a little bit of an exception, I would say. Yeah, there's a whole bunch of stuff that I think that just got dumped heavily and will come back into play once we get this sector rotation and growth and concentration risk to just calm the heck down. They will be forced buyers of this oversold stuff. Put it in here, right? So we're just talking about this yesterday. Russell rebalancing is coming into view. Which stocks are facing the most buy and sell pressures? And it happens in June. This, I think, is really going to help this rotation trade, but we've got to get through debt ceiling and we've got to finish this momentum rally. As I'm talking about it, what's happening with copper? I'm looking for levels to start getting support and moving higher as the dollar is softening. This is totally separate what's happening with CCJ, okay? That's totally a mine, right? Versus an index where I'm looking at steel. If it can stay above 55, that's just a technical level. Look at it starting to turn up. And then there'll be plays within that, right? Will US steel ever come up off the ground? I'm looking for levels as well, because that was a fabulous monthly resistance, right? Monthly resistance, we came back in, didn't break the 10, hit it again. That was gorgeous. I mean, that was just stunning, right? And then look at that expansion bar. Bingo, that's the confirmation short that I want. That's when I know this sucker's going down, but I don't have it until I have it. So this has been a long time in rolling over. I don't know if 20 is really going to be strong support yet. I don't see anything yet to indicate a reversal. I'm seeing some levels I like, right? That needs to stay above the low of 55. Copper needs to stay, oops, sorry. And then, of course, FCX and others are in that play. Needs to stay above 34 for something of a bounce. XME was the 44, remember? I say 44, but you get the idea. So maybe there's thinking about going into the rotation of value. Yeah, I think those types of plays might have some very nice kind of risk reward next month. We got to get through, I think, June, but the targets of the world, the mosaics of the world, things that are just in an excruciatingly long downtrend that are value plays that have been sold indiscriminately to pick up the concentration risk in momentum plays pretty clearly. You got some China plays here that are absolutely, these wicks are getting bought. Coming back inside this trend line would be very helpful for China plays. If it's more than a bounce, we will get back above this monthly. Otherwise, it's just an oversold bounce. But that could also be helping this kind of guy, right? Where copper, China, and by the way, with this being helped, it's going to help small caps. Okay, Dollar General just hit the 400 week. Quote unquote, it should bounce here. So basically it needs to trigger 167 to really, really be a bounce. In other words, it's the 400. It's obviously still in sell-off mode. I can see volume is lightening up on the sell-off, but nonetheless, what I'm looking for is to see if we can get any stabilization here in this sell-off. This was a big gap up. It's obviously in its path to come back into also 2019, 2020 highs. Up 129, getting a little support here. We shall see. What I'm doing is just trying to find the stuff that is exceedingly oversold. At the same time, I'm waiting, anticipating this rollover in this massive growth rally. Do you see it? Now we had a little one here, and then we had NVIDIA report. We don't have anything else reporting. We're out of earnings season. We're out of the drama until the Fed meeting of the 15th. That's now been telegraphed as a skip. So where is our drama focused? June 5th, debt ceiling vote, TGA. I'm looking for stuff that is exceedingly oversold to come back up from the dead. 129 tapped on ZB, 103.5 on TLT, and now yields look like they want to make a little bit of a party. I'm expecting this to be tested, which is gold. Look at copper and steel right now. My stuff is absolutely getting a little bit more in the support area. Yep. So this morning, I'm going to just say it for right now, it's short duration. It doesn't mean that this growth rally is over, but I think at least it is forming some pretty nice bounces of XME above 44. We're already up to 45. Look at that. 44 is gorgeous support. SLX 55 is not really taken off yet, and COPX above 34. So those are levels I gave this morning, and they're definitely having a little bounce. Still CK Web is pushing back inside. They don't want to give up yet. And we obviously have a lot of trapped shorts if copper and the rest are doing the same. We still have a lot of economic data in contraction, but labor market's still firm. We have the Fed with a skip being telegraphed. We have, oil and other commodities that have been under pressure that I don't think oil is going to get a bid, but it definitely has OPEC meeting this weekend. The more important kind of tell is we've got dollar right at resistance for now, short-term resistance. I still think it's going to head back up here. So short-term, this 104, 105 area, but I think it's going to make a trip higher to this 105.63. And I don't think it's completely done. I think we kind of come back a little bit and then move higher. I don't think we're going to fall very far. Small caps relative to SPY on a monthly tells me that we need to base here, but it's a higher probability after June. I think this is going to peter out. I think this is a better concentration here, risk of reversing in June. Same thing, buying right into this kind of tag you're it, but I think we have to wait until this whole June rally. Dollar's still rising, also into that 105.5, 106 level, should peter out here. And then by that petering out, I mean by a pullback down to 98, which should give some commodities a little bit more support, which basically would also support this basing action in value. Non-farm payrolls, can't wait. Let's get it out of the way tomorrow. In the meantime, in the in-between time, we definitely still have this concentration risk in growth. I am still going to be waiting for a rollover. It's got to give me a pattern and get right back inside this ratio level. We're at the still in breakdown mode across the board, whether it's NYSE bullish percent index, right? Whether it's SPY with its components above the 200 are, 38%. It doesn't matter. All of the intermarket is still telling me weak breadth in stuff that matters. Talk about XME, might have a little bounce here, but it's still got a channel lower. Talked about the dollar higher. I still think we're going to tap that 106 area. This just happens to be, by the way, kind of global advanced decline. We've really petered out. We have not broken above. We also haven't broken down, but we are at a massive inflection point right here, which is fascinating to me. Again, this is ACWI, which is basically global ETF, very institutionally traded. And below here is basically kind of an inflation momentum signal that I like to use. and we're just kind of petering out. Price is also at an inflection point, waiting for some kind of move above or below to get excited. Same thing, right? Gold having a little bounce here. You can't see it, but it's on a trend line. But I'm not so convinced it's not going to come back down to 175, 174 area. That's still my baseline bet. XLE, yes, getting a little bit of a bounce here, but unfortunately, we're still in sell-off mode. Anything below zero, right? Every time it kind of crosses over, and I don't have the red, but it crossed over. So I'm still expecting maybe a chop into June, and then we'll get some support once this growth rotation rolls over. But I don't see a lot of support, just some technical bounces. We talked about yesterday, Craig and I, the momentum and value, forced buying and selling in those ETFs as well will likely be, in a small part anyway, reversed in the Russell rebalancing at the end of June. So that's where I'm going to be looking for a bit more of that rotation in a little bit. I'm still looking at this concentration risk, right? This is NASDAQ to SPX. We've had a massive intervention since October. This is monthly, this is weekly. Literally, the January effect has been very, very strong. And we are in a phase of potentially, I think anyway, hitting our head and digesting in June, and then having some weakness, but we have not had any sign of it yet. This was a great tell back in 2021 and then 2022. It's been kind of a funky little ratio that I like to use to kind of show that we still have momentum in play, and that's what we still have, but we hit a trend line yesterday. So we'll see if that gets any selling. We got a dollar that looks like it wants to peter out, and a whole bunch of reflation trades that want to bounce, but it's not safe yet because the growth rotation is still in play. That's number one. Number two, we have, yields, the 10-year coming back, but then getting firmly supported at that 3.6. Now we need follow through if we're going to have a bond pullback, right? And NTR, Mosaic, IPI, all of this stuff that I'm looking for as a solid reversal in value is not going to happen with any solid consistency and follow through until this puppy completely comes back inside this ratio, right? So that's going to be a higher conviction when we can get this and then follow through the downside. Then we'll get those value plays up and off the ground. I still like to see what's gonna happen with dollar and yields. And June 6th, we got some definite pressure coming in. I think they're going to suck some folks in, unfortunately, with this one. I still think the dollar has one more move higher. Look at uranium. Wow. I already gave the levels, right? Yeah. Steel above 55, copper above 34, and XME above 44. And so far, they are bouncing this morning as the dollar softens. So too should XLE a little bit. But again, I still see this break and 73 in XLE coming into play. I don't think it's done yet. Very short duration bounces. Yeah, same thing with XME, right? It hit that 44. That's all. Growth rotation doesn't look done. To me, it's going to be all the value stuff that's wicked oversold. And I don't mean just for one little green blip, right? I mean a solid base that is done going down.